Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. We have 3 stocks that you should be looking at today to buy. And we have very specific rules I'm going to share with you on why we think you should buy these stocks. Now, as you know, we're not brokers, so whether you buy them or not, that's entirely up to you and your risk profile. But the first stock we're looking at is Amazon. Trade on the Nasdaq, symbol AMZN. And this is a daily candlestick chart of Amazon. A couple of things I'll show you really quickly is this is where we actually got long right here. This is when the major monthly trade triangle kicked in right here at 341.26, and it's about $100 higher, almost $90 higher right now. And we would have gotten out here for a profit and gotten back in, and we are still in this market. Now here's the reason why. We had a signal indicating that the trend was clearly on the upside. So the trend is up, so we wanted to see a pullback, and we haven't seen a large pullback in actually this base, but we did see it on the RSI right here. We've come back down to this very important support line at 50. We've talked about these support lines. You can see them right here and right here to a certain degree, and certainly to here. So every time the market's gotten down to these support lines, it tends to be an area where it looks attractive, particularly if you have the trade triangles all lined up. Okay, so this third one is not so important, but these first 2 are very, very important. These are the 2 you should concentrate on. So the market pulled back. It was back to support based on the RSI, and it was a buying opportunity. Now the other thing we see in this market is the fact that if you look at how this is just going like this, it's just like a big sort of area like this, just ready for another big bounce up. I think we're going to see this stock go higher. What if we're wrong? I would say if we go below 420, 418, something like that, that would be an indication that we're not correct, and you should be out of the position. But generally speaking, we like Amazon from the long side. Next stock is an eBay. You're probably aware of eBay and what they do, but generally speaking, you have all of the trade triangles with the exception of the daily, which we said earlier is not that important, so don't pay much attention to this one right here. This is just not that important. But the other 2 are very important. If they're aligned, both green, then the trend is clearly strong and clearly up, and you've had a pullback. Now the pullback has come right back to the area of support, the 50 line on the RSI. We've talked about this before and how important it is as a support line. If you just look at how this works, if you go over the 50 line like here, then the trend is up. If it goes below, like here, the trend is down. You see, expect weakness. But again, when you see a sideways move like this, then you tend to be thinking, okay, the trend is still very positive and back into support. And plus, the other idea here is that you have this area here that looks like it's going to lend itself to a much higher move. So let's see how that plays out. But generally speaking, we're looking for this market to continue up. If we're wrong, I would say probably you want to just say probably the lows here, maybe 58.5. Or even if you want to be more conservative, yesterday's low, which is right here. So that's an area to look at. So let's see how that plays out. Next stock we like is Under Armour, and here's the reason why we like Under Armour. All of our trade triangles, monthly and the weekly, positive. You're above the 50 line, and you haven't come back that far. Now what's interesting here, you see the signal here at 79.44. We're currently trading at 81.62, and you've got this nice sort of base the market's built up on right here that you've broken out of to the upside. I think we're going to see Under Armour move higher, and we like this stock a lot, and I think we'll see it actually eventually trade up to over $100 a share. They definitely have their act together, and people are wearing more and more of their clothes. Everywhere you look, you see the famous, that Under Armour logo, whether it's in tennis, whether it's in athletics or running or whatever it might be, and they're soon to be coming out with a cycling line of clothes that I think will be very, very popular. But again, this is a very low-risk stock in my opinion to be long. I would say if it goes below the low that was seen yesterday, that would not be a good sign. I wouldn't say you should get out, but that would not be a good sign. To get out, I would say if you go below 76, that would be we're wrong, and you may want to look at this again. So that's the stock we're looking at. We're looking for it to go higher and move up to about the $100 level. Let's take a look at the indices now. Look at what the indices are doing. We said yesterday we thought this was a low period simply because we are back down to an area that has been previously support, which is right around here. And you can see, boom, big move up. How far it's going to go remains to be seen, but one thing we can do is put on another indicator, and it's the parabolic. And we just hit the parabolic today. You can see that the parabolic is just below, indicating the short-term trend is up, but however, I'd like to see it move over the 50 line. That's the key level to look at. We don't have all of our trade triangles aligned on this. You can see that quite clearly. We have the weekly down, while the monthly, the longer term, is still positive. So this is just an indices. It's made up of 30 stocks. It's unlike a regular stock like Under Armour or Amazon, which you have individual stocks doing individual things. This is a collective consortium of 30 stocks. So some will be up and some will be down. That's why you get this mixed score of 55, which is a trading range. S&P 500, same thing there. We're very close to topping over the 50 line. I would say it closes over the 50 line. It's a very good sign. We're actually, hard to believe, higher for the week. After several days down, we've just had a big move up. It was not unexpected to us. Okay, we said yesterday we thought this is back down to support, and bingo, we've had a nice bounce. Now the Nasdaq is a totally different dish. This area here, and I want to show you, this is called a morning doji star right here. This is a very important Japanese candlestick formation, and when you see this, so it's like a little island called it's a morning star, and bingo, you've had a nice strong up move here, indicating we're probably going to make new highs. So I like this a lot. Just watch this weekly. If that turns green, all lights are go. But you're over the 50 line. Unlike the other two indices, you're over the 50 line, indicating that you're probably going to go higher. I want to talk very quickly about crude oil. We had a signal in crude oil today. Even though it's back down, the U.S. has become the #1 producer in the world of crude oil, which is interesting. You're over the 50 line. This, to me, looks very similar to a situation where you've been in a supportive role like this, and we're going to see this market go higher. So I would want to be long this market. We talked about breaking over this area here, this huge base, and this is capable of taking this market much higher. We had the double bottom, of course, the pivot point. If you measure from the 48 up to these levels here, which is 58, that's $10. We should be going up to $68 to $70. That's the target zone we have for crude oil. Hey, I'm Adam Hewis, and we've touched on 3 stocks we want to look at, plus crude oil, plus some of the other things we want to show you. But the key area is look at the weekly and the monthly trade triangles and look at the RSI. That can tell you where support is and where you should be adding to a position. Have a great trading day, everyone.